This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
Oil prices climbed in early trade on Thursday, supported by strong demand in the U.S. after gasoline stocks hit a three-month low and crude stockpiles dropped unexpectedly, with supply concerns remaining after Ukrainian attacks on Russian refineries. Brent futures for May climbed 11 cents, or 0.13%, to $84.14 a barrel at 0652 GMT, while April U.S. West Texas Intermediate crude rose 10 cents, or 0.13%, to $79.82 per barrel. Both contracts had risen about 3% to a four-month high on Wednesday on the elevated U.S. demand outlook and heightened geopolitical risk.
U.S. crude oil stockpiles fell unexpectedly last week as refineries ramped up processing while gasoline inventories slumped as demand rose, the Energy Information Administration, EIA, said on Wednesday. After 6 straight weeks of builds, crude inventories fell by 1.5 million barrels to 447 million barrels in the week ended March 8, the EIA said, compared with analysts' expectations in a Reuters poll for a 1.3 million barrel rise. Gasoline stocks fell by 5.7 million barrels to 234.1 million barrels, the EIA said, nearly triple expectations for a 1.9 million barrel draw. That marked the 6th straight week of draws.
Moving on to the top news in the energy sector.
Oil producer group OPEC said on Wednesday it was encouraged by a commentary from the International Energy Agency, IEA, which underscored the importance of oil security, while the two remained far apart on the demand outlook. The commentary by the IEA, which advises industrialized countries, follows clashes between it and OPEC in recent years over issues such as long-term demand and the need for investment in new supplies. At OPEC, we are encouraged by this message and the reference to the continuing importance of oil to the world, the Organization of the Petroleum Exporting Countries said in a statement.
Ukraine struck Russian oil refineries in a second day of heavy drone attacks on Wednesday, causing a fire at Rosneft's biggest refinery in one of the most serious attacks against Russia's energy sector in recent months. Oil prices rose 2% partly due to concerns about supply disruption following the attacks, which President Vladimir Putin said were an attempt to disrupt his country's presidential election this week. Russia and Ukraine have both used drones to strike critical infrastructure, military installations and troop concentrations in their more than two-year war, with Kyiv stepping up attacks on Russian refineries and energy facilities in recent months. Next, we have the top news in metal markets. A slump in the price of lithium, a key raw material in electric car batteries, is dragging on China's mining of the ultralight metal, which together with a costly extraction process is prompting a reassessment of output growth and new project plans. Softening EV demand has knocked down global lithium prices, with a basket tracked by benchmark Mineral Intelligence plunging more than 80% in the past 12 months. That has already forced many producers worldwide to shutter production and cut jobs. In China, which accounted for about a quarter of the world's mined lithium output in 2023, analysts expect the mining of lepidolite, a hard rock ore that is relatively expensive for producing lithium, to take a hit as a prolonged price slump makes costly production unsustainable.
Iron ore futures prices languished on Thursday, with lingering concerns over demand in top consumer China acting as a headwind, although Beijing's latest pledge of equipment upgrades capped losses. The most traded May iron ore contract on China's Dalian Commodity Exchange ended morning trade 1.22% lower at 809 yuan and 50 fen, $112.57, a metric ton, posting a fall of 16% since the end of Lunar New Year holiday break. The benchmark April iron ore on the Singapore Exchange was 0.85% lower at $104.65 a ton, as of 0335 GMT.
We will now look at the top news in the agricultural sector.
Russia is flooding the global market with cheap wheat as the world's #1 supplier draws down inventories ahead of an expected bumper harvest, easing food inflation for importers but intensifying competition for rival exporters. Prices of US and European wheat have dropped to their lowest in about 3.5 years, weighed down by Russian grain flows, which have prompted China to cancel recent purchases from the United States. Global cereal supplies are shifting to surplus from the shortages of the past several years caused by unfavorable weather, the coronavirus pandemic and the Russia-Ukraine war.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.